Okay, so we're recording now. This is just a quick reminder. Anything you hear in the following session is not to be taken as financial advice or a recommendation to buy or sell any security. The views and opinions expressed are merely for educational purposes. We are not and will never be your financial advisors. You have the floor, Broda.
Awesome. So since we've got a few new people here, and I've done this every other week, so everyone that's been here quite a few times already can go and get a cup of tea or something just now, or whatever people drink outside of Britain. Um, my scanners are all on the education channel; they're all pinned there, and I've made them to try and help you find the best possible trends and patterns and kind of filters that you possibly can find in stocks. Obviously, I use other ones as well on top of this, but it limits the amount of tickers you're going to get. So this is what I tend to use because I'll happily sit and go through 800 tickers in a night, just look at it. But there's ones that are a bit more filtered down for you guys in there, um, just so you're not staring at 800 charts. Because I know it's easy for someone like me or someone like Gixer to go through this in a night or even twice a day or 10 minutes in Gixer's case. But it's going to take some of the newer guys a bit longer to kind of work out what they're looking at and what they need to see, in just these kind of tiny little snippets of charts that they give you on FinViz. So um, I've put up all them in there. I've written what you can change and what you can take out and what you can kind of adapt a bit and what not to kind of change. So there are a few things obviously I wouldn't change. It's up to you to kind of play around with them and see what kind of works for you and find a strategy within these. But obviously, FinViz is completely free. You can have accounts on it and you can sign up for stuff and pay money. I think it gives you the possibility to look at charts and alerts and whatnot. But this one's all set up for you guys, and this one is just kind of a version of that that's been brought down a bit. There are a few things that I bring up more often, and one of them's the float, and the float one's quite important for me because when you start getting really high float stocks, you tend to see it just takes a really long time to kind of get that movement you need, to kind of play the actual shorter term swings that we do. So the high float stocks could be great for like mellow kind of swings, and you can swing them all the way up, and you can hold them for months and years. But unless something really kind of important and vital is happening at that time, or some news or approvals are coming out, you're going to see a lot of barcoding on your charts. And when you drop down the time frames, and that does tend to kind of worry some of the newer traders because they're like, this is just taking too long, and it's not going fast enough, and I'm not making enough money, and then they end up cutting it, and then it pops. And whether it pops because of news or whether it pops because of something else, they then get annoyed and they're like, well, that didn't work for me. What did I do wrong? And obviously, the thing they did wrong was patience. But if you don't have that patience, or you don't want to play the swings for over the course of a year or several months or several years, you're going to kind of want things that will move a bit faster. So that's why that's in there. I do have an average volume of 100. I know Gixer plays some stuff that are a bit lower sometimes. But I like to have that kind of standard volume range, so that's probably as low as I'll go for mine. That's personal preference, and it's just from looking at charts and looking at kind of how they play out. I just like a bit more volume in the stock and a bit of liquidity in the stocks. I filter my price down. That's just personal preference. You can have it off as well if you want, and you can play some super high price stocks if they turn up. But I've just got it kind of set to a number I quite like playing with, and it obviously just reduce the tickers as well. And I've always got my price above the 50, so that just makes sure that I'm in an uptrend just now, or at least moving into an uptrend in the kind of larger scheme of things. And obviously in the one that I put up on the channel, there's a couple more things. So these ones and this one you can remove, and that's just extra bullish context for you. I'm just making sure we're not at the high, just to make sure I'm not having anyone that's buying right at the peak of something and it's just going to plummet on them. Because one, if you're buying the peak, the only level you've kind of got nearby is support levels, so you don't know where you're playing to unless you're going to play with fibs, or unless you want to scroll all the way back and find a resistance level. And chances are it will just come down. You could play all the way up if it keeps going, but we don't chase. So what we'd want to have done is find it before it starts making that move, or just when it starts making that move. So we don't want to buy after like 4 candles of a green bullish move. So we've got that to kind of make sure that we're not right at the top. The beta's in there, which is just one of the Greeks. It's just a volatility measure, so to make sure it moves a bit more in the market. Um,
Rowan,
and
just a quick thing. Can you click the hide button on that Discord sharing thing at the bottom of your screen? Yeah,
oh
just click
yeah, sorry.
hide so that, yeah, thanks.
And 52-week high low, I'm just making sure we're nowhere down there, so it's not something that we've been brought all the way down at the bottom. Because they do tend to play it a little bit different, and if they are being brought right down to the 52-week low, they could sit there for a while it's been accumulated until you've kind of worked out where to see accumulation, or if the stock's just rubbish. I don't want people playing this, and I don't want people playing stocks that are down in like 30 pence or 30 cents or 50 cents just because they're like, oh, well, this could go up to 12 and I'll make a lot of money. Because yes, it could go up to there and you could make a lot of money. But if it's been brought all the way down there, it's been brought all the way down there for a reason. So either it's going to sit down there and get accumulated for a while, or it's going to get brought all the way down there and just die. And obviously Mel is really good at trying to find the ones that have been brought down and they're being invested in and getting kind of they're kind of building it up to let it rip at some point. But there are stocks that get brought down there, and then you'll get your reverse splits and stuff like that just to try and get the price back up so that they meet the regulations, which is always a bit worrying because we've seen that with ONTX a couple of weeks ago. You get the reverse split and the price just plummets, and people get caught up in it. And then obviously there are plays kind of intraday you can do on reverse splits, and people get confused by them because they see the big percentage gains. But I wouldn't try and buy things that low down unless you know exactly what that company's doing and if it's actually got kind of potential to go back up in the future, or if they're just burning cash and they're going to run out and they'll have to do an offering or a split. So once we're in this, the first thing I want you guys to do is ignore these technical charts that they give you. Because they do help, and I've seen a few people using them, and I see a few questions on the education channel and the question and answers channel, and they're like, Broda, how does this look? And they've not drawn the chart, they're just looking at these lines. And whether these lines are right or not, I'll probably say they're not, because there's just kind of a lack of precision, because obviously there's not someone on the other side of the screen drawing these lines for us. These are done by computers. So we don't want to trust them, we want to draw our own lines, and whether our lines are right or not, it's on us to make sure they're right. We're not going to trust someone else's lines. And you'll see, I think it was in the video that he posted, and it was off. And because it was over the course of a year from the line, it was off by a good like 10-12%. So it makes a difference when it comes to the kind of end of the game and where you know if you want to buy or sell. You don't want to have a line that's nowhere near. Like, I mean, this line's just cutting through all these candles down here. Which they might have a reason why they've done that, because they've obviously gone from where it's dropped to where it's popped up to, but that's not where we want our line, is it? Because that's going to put us off. So turn off those technicals. You can look at them if you're kind of new and you want to kind of work out what they're seeing first. You could look at the chart, but then just turn them off. Take it into TOS or take it into TradingView and chart it up yourself. And just make sure that you know how you want to play it and how you see the chart, rather than how someone else sees the chart. Because even my own charts, if I put them up, take them out and draw them yourself. Because we don't want our charts being used as this is the holy grail of where the line should be and I'm going to follow this exactly. Take them out, draw your own trend lines, draw your own patterns, and work out how you see it. Because if you can't see the patterns without looking at someone else's work, you're not going to be able to do this for yourself if I'm not here, if Dexter's not here, and no one's going to be providing you those charts. So you need to be able to work out where the patterns are coming from. And so we obviously put them up and we go through them just to make sure that you guys know what we're seeing so you can learn that. But we want to make sure that you're learning it for yourself so you can be self-sufficient yourself. So we turn that off and we go to the candles. And then what we're looking for is charts that interest us. And you'll see charts like WPG. I would not have been playing this when it was doing this stuff down here. You probably could have, but that's just not a chart that I would have been playing. I mean, you could have sat and waited a couple of weeks and watched it jump up and down a wee bit. But it's not something that's worth it. And then obviously it pops and it gets a lot of interest. So then what you'd be waiting for in something like this is for new patterns. And obviously it's kind of flagging just now. But you'll be waiting for patterns to happen in these charts, and patterns we like to play in these charts. And for us, for me anyway, there's two two types of patterns I want to see. Either a pattern that I'm going to get a breakout from, or a channel that we can just bounce it around in. And we can just rinse and repeat the same play over and over and over again. The things I don't want to see are things like this, where it's just a massive downtrend. Because we can play these, and there are obviously ways to play these. And I mean, I've played them as well, but they are a bit harder to kind of work out what you're meant to do. So what I'd tend to do in this one is look for a change in the trend and a change in momentum and direction of the trend. So we don't want to be trying to buy here and sell here and buy here and sell here all the way down this fallen wedge or this channel down. What we want to do is look for something that interests us. And obviously it came down, it bounced, and it came down, and it bounced. And these lows were decent, and then we got a big pump in volume, whether that was news or whatnot, and we got the breakout. And there are times where I will play a breakout, and if it's on a day where they've got news and they break out with a pattern like this, I'll play it, but I won't play it the same way I play other breakouts where it's just natural movement of the stocks. Because what can happen in these ones is you can break out and you come all the way back down, or you can break out and you can keep. It just depends how people read those news. And unless you've got a whole catalogue of plays before that are almost identical and you can like semi-base it off that, don't just buy in here and hold and think it's going to go all the way up to 5. And this one might go all the way up to 5 or go up to 450. But you can't play all the way down this and then try and play it all the way back up. You need to know exactly how you want to play it each time. And I'll show you why we don't play down these fallen channels. And I can show you why you could look to sell on the first day or why you could hold later on today. But that's something we kind of try to avoid. So we don't want to play something that's stagnating and not moving enough and doesn't have that kind of volatility and bounce throughout the couple of days or week, so that we can get in and get out without just sitting and waiting and hoping for the best. And we don't want to play things like this where it's falling all the way down. So what I'll sit and do is I'll go through all these charts. And what I used to do when I was starting out, if I saw anything that was even slightly like something I want to play, I'd take it out and I'd chart it. And if it didn't look nice, I'd cut it. And I'd just delete the chart and I'd go back. But obviously now that we've done this enough times, or I've done this enough times, you can kind of just look at these charts and kind of get an idea of what's going on. So I can kind of filter out some of the nonsense before I start building my watch list for the week or the day or whatever it is. So yeah, we go through all 34 pages, or I go through all 34 pages probably twice a day, just to see obviously what it's looking like in the morning and then what it looks like at the end, because something could happen. We could get a big enough candle or drop that we could actually get a play by the end of the day or for the next day. But I mean, like, this is one where I was mentioning earlier, you don't chase it up, because you could have chased it up and you could have made money, but how do you know that this was the top or this was the top or this was the top? And obviously then you could have got smacked all the way back down here. And you don't know if it's going to bounce or not from here. So this is why, that's the kind of reasons why we don't chase these ones, and why my other scanner wouldn't have had that one in it, because we wouldn't have had that option to buy all the way up. Unless we know exactly where it's going, and we know, and we just don't know things like that. We don't know where it's going to go. We can make educated guesses from our charts of where it might go, where it might stop, and where it might reverse, and we can use our indicators to kind of confirm those. But we don't chase it all the way up, or we don't chase it part of the way up thinking it's going to keep going. So like all of these charts where it's just falling all the way down, you will see pops at some point. But these pops will set up a new play for you. You don't have to try and chase these pops off the low either. So we can go through all of these. I'm not going to go through all the pages because that's just a bit sad. But this is what I'll do and what I'll try and do, and I'll try and find charts that interest us. And I can show you a couple of options, a couple of ways we can play these ones. And I've gone through this one a few times already. But it's probably the best version of a fallen pattern that changed direction, and you can play it. Because we fell all the way down and we popped out, but I didn't play this pop out. And obviously this is what we were looking at in that last one. That other one on FINVIZ, it popped out and it ran up. This one popped out and it came back down and just made another fallen wedge, which could quite easily happen. But then this day we got news and we popped out of this fallen wedge with news and big volume, and that's why we could play it up. And I knew where it was going because I was watching it, so I scaled out, and then we've scaled in and out and in and out. and then we're waiting for a new play, and whether it plays that trend line or whether it comes back down and plays the channel, we need to just kind of wait and see. But obviously, it's kind of dojied there on the last day with some decent volume, so I'm quite interested in it. This is just me drawing stuff, so you can ignore that. But this is the kind of way we can play these ones, and we wait for something to really noticeable happen on the breakout. Otherwise, it can break out and just come all the way back down. And breakouts and retests are really kind of prominent things to see. And that's why you have to kind of learn how to drop down your time frames. Whether, like, you always have to have these levels on and know where you would kind of want to sell, and that probably should be at 7 instead of 699, but I'm not very accurate with my sideways lines. But you have to work out how to drop down the time frames and watch what's happening at these levels that you've got noted down or got on your charts. Because we came up here and we had a double top, I'm pretty sure, and that's why we dropped again. And you need to look for things like that. And I was doing that on my channel on Friday as well. I was like, guys, why are we watching this stock so closely right now? And I gave them 3 questions to answer. And the guys that came back and answered it, they did really well, and they gave me some really good answers. They weren't quite what I was hoping they'd say, but they got like 2 of the 3 right. So I can't really complain all that much. But this is kind of what you look to do. You want to break out and you want to retest a level, and then you look for another play. You don't have to hold and go for that home run that's going to run all the way up. Because you could try that and you could buy in here and you could hold until it goes all the way up here. But then 1, your money's locked up while it's doing that run. And 2, you could have made more money just playing the bounces until the big run up. So that's what I kind of tend to look to do rather than holding for that home run. It's almost like the swinger version of scalping, where we can bounce it, and it's the same with HCDI that we were playing, and that Gixer's gone through the chart with you loads of times. You could have bought the low and just held until the market turns around and it pops all the way back up, but we could have played that 4 or 5 times already and made 20-30% each bounce. And then you could always hold to wait for the run up. You could hold those little shares to see what happens and then scale back in on the breakout. And it just gives you a lot more kind of options off the one ticker rather than just buying and hoping for the best. And the other thing, obviously, with these falling wedges that I was talking about on FINVIZ was that we don't play down these wedges. Because even when it looks like it might pop out, it could just come back down and hurt you. And the problem is, obviously, you could buy at the low. But when we're playing like a channel up, if we buy down here, or if we bounce from here and we do like this, and we buy here, it's easy to know where our support is and where our... So we can put it down under these candles as kind of a conservative stop loss. But when you're playing down here, if you're buying here, your previous low is up here. You can't use that as your stop. What you're then trying to look for is lines, the distance, kind of back in time to find where it might drop from. And obviously you could probably buy and put it under here. But what's going to happen is you could just keep being rinsed out. You could buy and it will drop, and you could buy and it will drop. And whether that's 1 or 2 or 3%, it's just continues 1, 2, 3%. And you're just going to bleed your account until eventually you get that pop. And then you could play up to here, and then you could buy here, and then you've got the same problem again. And that could just keep happening. And even when we do get breakouts, like we saw here, you break out and it just falls back into the trend. So we don't want to just go, oh, it's broken out the pattern, I'll buy. Because it could quite easily just fall away back down. So we need that confirmation and we need that push to really get it out and make it settle. Which is why I don't tend to play it when it breaks out, unless we've got something kind of obvious as to why it's broken out. Because this one just broke out and it just got brought all the way back down. So what if it did come out here, what you would have been waiting for was a confirmation of that line, and then to play it up from here. And that's what you kind of need to look for, rather than just thinking, oh, it's popped out of the line, I'll buy it now. You have to wait for either a reason why it's popped out or confirmation of it staying out that pattern in that line. And then you can kind of work on a play from there. Because even if it does run, you might feel a bit of FOMO and you might be like, oh, I could have bought there, and it's just kept running off. But you've probably played it better than the people that have held and it's run and made the money, because you've got a reason why you didn't buy. And their reason for buying isn't as good as your reason for not buying. And I think that's really important to kind of realize with those lines that we don't buy just because it's broken out. We have to have it broken out, and we have to have other reasons past that as to why we know it's going to keep going, or we wait for a play that we can work on the probability of that play, and we know where it could go then with a higher conviction than what we would have done if we just bought in this breakout up on this candle. And since these are here, I'll go through, and I posted this on education as well. But I had a few questions about just starting out charting. I don't know if I'm meant to use my wicks, or I don't know if I'm meant to use my candle bodies. And I don't know what happens with these pops. And I can't remember the chart, but I'll try and find it on the chat. And someone was like, oh, it's broken out a wedge. It's broken out a falling wedge, and I think it's a great time to buy. And I was out during the day and obviously didn't see it in time, and he'd taken a position. And then obviously I put a message in saying it's not broken out, and it could drop by at least like 8-9%. And obviously then he sold and took a small paper cut, but it wasn't as bad as what it could have been. And that's kind of things you need to know. So this first one, what we'd obviously do with this one, since we've got a really nice consistency in our wicks, we can play the, probably shouldn't do this with the pen on the screen, but we can draw a trend line on the wicks. And then we can maximize where we buy into where we sell, and we can maximize our percentages because we've got that consistency, and we know it's going to bounce. And it's obviously it's worth probably if you're starting just having the line on the bodies. And I mean, I make them kind of fainter just to make it easier for me to not pay attention to them, but it's what I'll look for when it's coming back down. But these obviously maximize what we can buy and sell in our percentage gains. But if you're getting some kind of chart patterns like this, if you start drawing your wicks, you're going to have some weird ass patterns going on that you just can't work with, and you can't know where to buy and where to sell. And obviously, the reasons for these wicks happening, you'll see intraday on the intraday charts. But on this occasion, what you want to do is play the bodies. And obviously you won't get the same kind of percentages as you would if you played like this wick up to this wick, but you don't know if you're safe playing this, because you'd be like, oh, this is a dip buy, and I'm a big fan of dip buys if they're a sensible dip buy. And if it comes down here in intraday, you've got like a double bottom, or you've got a like a positive divergence on your RSI, you could try a dip buy. But probably not at this percentage range. If it was like down here, you probably could. But this is when you use your bodies. It was actually, I think I might remember the chart. Yeah, so this was the chart. And what they'd done obviously is they'd used this as their breakout. And they were like, oh, we've broken out. And I mean, you could use these as your trend lines, but that could be like your overall trend, but you could be using this candle as well. You could be using this candle. Like what would have made this one the one that worked for your trend? Why would this one not have been the one that worked for your trend? You could have dropped all the way down. To me, this it obviously bounced and it gone up, but this wasn't a nice pattern to play. They didn't know what they were playing here. So this could have just been a fake out. This could have been just momentum, taking it up there. It could have been a chat room pumping it. Shouting all-time highs, it's going to run. You don't know what's happening up here. So personally, anyway, I would have ignored that, and I would have played that channel that I had kind of going on down in this area, because this is a long enough lasting pattern. This is what 3 months in the making. So if you were then buying here, thinking you were a dip buy and you were falling into this kind of retest of this line, you might well be, but you've got a roadblock coming up here anyway. So you could have bought here and made like what 6-7%, but you could then just get slammed all the way back down here. So what we really want to do with these ones is know where our support line is and buy down here, because then we do have this roadblock still in front of us, but we've got a better percentage gain up to that roadblock, and we know where our support is, and we're not just guessing, oh, 650, that's a psychological level, I'll use that as my support, because yeah, it might be a psychological level, and it probably will affect it intraday, and it can even affect it on the daily charts, but it's not a strong enough support for the way we play, and we play with the patterns and the trend lines. and there's just not a pattern or a trend line on that level. Obviously, you might have that one that was coming down. It could have been a retest, but you don't have the clear sky in front of you to play it all the way back up, and you're just going to hit this line, and chances are you're going to come back down because, I mean, we've got a low volume pullback, so it could be good, but we could have a low volume pullback pulling us all the way down here, or we could be bouncing off one of the EMAs again and then make a move back up. So this is the kind of thing you need to look for. You need to look to see if the pattern is actually what it's doing, or if you're getting kind of confused by fake outs in your pattern and starting the pattern at the wrong stage. Because I mean, if you wanted to use this line, you would probably have it connected up here as well. So you would have had a pattern going like all the way up this way, and you probably would have been hoping for it to make like a channel going up that way or somewhere like that. And that's where you would have been playing with those lines, but we didn't do that. What we did was we just fell all the way back down, back into a level that we knew it was working in, and we knew that there was volume buying and selling in this area. And that's why I tend to ignore this when I'm playing as well. And I'll look for a trend after that. So that's when the wicks can get confusing, and when even breakouts on the bodies and candles themselves can get confusing. The other thing I wanted to go through as well was the reason why we dropped down levels. Sorry, not dropped down levels, dropped down time frames when we're playing. And if I bring up ISNS, it will probably be the best one to show you, because we took this trade this week in my channel, and I think some people might have taken it as well in Melo's channel. And obviously, we had a few patterns going on here that people were calling out, so I drew them all on there for you, because obviously we had people saying that we had this flag going on and we'd broken out, and we're like, yeah, we did, and that's why we got this pop. And then we formed this cup and handle up right back onto the trend line, and this is where we were buying at the bottom of this candle down here, and trend line support, and we knew that it already tried to break out of this handle and this bull flag. So we were buying here because we know we could have support just down here, so we could put our stop loss in. We're not going to lose much. And obviously what happened was we broke out, and then we had a good day yesterday as well. And I was saying to people, right, actually I can bring up what we were doing, because I just wanted to get people a bit more involved in what we were looking at. And obviously I wasn't even there that day. I was away out at a party, and I was just like, I need them to know what's happening here. Let's see if I can find it. There's been a lot more message in my channel lately. I used to be able to scroll back like 2 scrolls and I'd find my message. There we go in here. So ISNS started moving, it started catching. And I was saying to them, right, we need to pay attention now, because we've had this pop. We've had a decent pop. I can bring up the charts in Webull. And I was like, right, guys, I want to know 3 things. I want to know what the pattern we're in after the pop, the reason we've had this second pop, why we need to be careful right now. And obviously a few of the guys got back to me and they sent really good answers. I can pull it up actually, and it may be a bit easier to see, but this is why we drop down timeframes and why we can look to scale, because what could obviously happen on this chart anyway is we could run up and we could hit this and we could come back down. We could end up losing those gains, but we could buy in back down here. We could play it again from down here, and if we're scaling from our initial buy here, we scale back in here, our average is going to be in between those levels. So we can play it safer, and we're already below the trend where we're buying in, as long as we're buying in on that trend line. So this is what even the day trader guys are saying, by scale on the moves, because you don't know where it's going to go next. And obviously the other way we could do it is we could scale back in on the kind of breakout when it actually does break out, and we could scale back in and kind of maximize those gains once we've got that confirmation of breakout as well. But just kind of buying on the trend line and then hoping that it keeps running is always a kind of risky business, because you could see your account going up by like 20-40%. And then if you're wanting a little bit more and you don't scale out, it could come all the way back down, and you could end up with like 1-2%, or even go negative or getting stopped out, which we never want to see. And we want to see people kind of lock in some of their gains and making sure they're locking in some of those gains. So if we get ISNS and I drop this down, and this is obviously something that the guys, if they were playing this during the day, which I'm pretty sure they weren't because it wasn't enough volume for kind of day traders to come play with it as well. And obviously after hours it's marvelous and I love to see it, but we popped off some good volume down here. We ran up, and this is where I was calling out for them to watch it, because we knew this kind of 880, 875 level was going to be interesting from our daily chart. So we popped up and we started flagging in here, and then we popped up again. So obviously the reason we popped up that second time is we had that pincer bottom or tweezer bottom at the bottom, and that was why we got the second movement, and broke us out of this kind of flag we were in over here. But then why I was looking to scale and why I did scale a little bit was because we had a double top up here, and we had a double top with worsening RSI strength. So we've got negative divergence on the double top. We don't have that same volume that we had on the first move, so I knew we weren't going to break out up here, and I can see we weren't going to break out up here, so I scaled out a bit. I bought back in when we dropped down here. And I took a little bit more on VWAP, and we got a move after hours. But I mean, my average is still sitting like way down here somewhere, in like the eights, the low eights. I'm not in any kind of trouble of going red up here, but I've already locked in profits. Even when you're swinging, when you start getting some movement and some volume on your swings, you kind of want to just drop down a couple of time frames and make sure that you know what's exactly happening right now. Because you could start seeing things like a double top on the hourly that you're not seeing on that daily chart, and it could get worrying. And I mean, that's kind of what we were having in here, and that's obviously something you need to look for and be prepared to look for and scale out on, just in case we fell all the way back down. We could have bought back in down here and played it back up again and made some more money. And whether we got a triple top and fell or whether we broke it that time, we'd be ready to play that. But we don't just hold and wait for it to pop. And obviously, if people did do that, they might get lucky and this could keep running next week. And I'm kind of hoping it does keep running next week. But I've already made money off it. So then I can be more conservative with my stop because I've already made that money. I don't need to just break even. I've got a buffer underneath my break even that I've already made. So I don't need to be quite as paranoid when it starts coming down. And I know that's kind of harder for some of the smaller accounts to kind of scale out because they might only have like 100 shares or something of this. So when they're scaling out after like a 6% move, it might not mean much to them. But even that scale out, if you then break even off of this stock and it comes down, you break even, you've still made money, and that's money you can put in another play next time. Where if you scale out, it's a bit more money and it's still compounding. And whether you're compounding with like 0.1% or 1% or 10%, it doesn't matter. You're still making money, and that's what we want to see. We just want to see people make money, because in the long run, it will add up. And when you kind of start to get more reactive to what's happening in the different time frames, you'll compound for more and you'll make more every time. And it will just all kind of add up. So that's kind of why we want to drop down the time frames as well when we're playing even this kind of longer term swings. In my kind of term swings anyway, not so much mellows. But yeah, starting to do that as well, obviously now. But that's the kind of things we need to look for, because you don't know where this is going next. And obviously it has broken out, but it's still come all the way back down because we know we've still got more roadblocks in the way. So we need to be really careful with these kind of tickers, and we just want to make sure that you're all locking in gains as well, and it's not just me that's doing it. And the other one I wanted to show you for the same one was one we had on our watch list as well, which was ears. And obviously we had a really good morning when the news came out, which I mean I wasn't completely expecting, but if you look at the chart, they're pretty periodic with their news. But we got that pop and we came back down. We kind of accumulated a bit. With some of these drawings, we accumulated a bit, and then we got this pop at him in the morning. And this was something that I was talking to, I think it was Gup, actually. I was talking to him about just watching for artificial volume. And it's really quite hard to see on your daily chart if you're getting artificial volume or not. And I mean, he's called this one out in the morning. He was like, there's artificial volume on ears. Just pay attention. And I told you guys as well yesterday that you need to kind of take note of these, because they will affect your daily charts as well. If you're getting a pop and it's dropping all the way back down, and that pop's caused by one of the other groups or someone on Twitter, it's going to make your chart look weird. And you might start using these lines as your trend lines, and they might work, but they might also kind of skew a pattern that you're already in. And I mean, that's what easily could have happened on that POW chart where it popped out and we're then using it as a trend line, but that's not real. That's not a natural movement up to there. And none of this was a natural movement. And that's why I sold out up here. Because I mean, we ran out, we had the bull flag break, and I was like, right, I'm probably going to sell. And obviously, we've got an RSI divergence, a negative RSI divergence. So I was scaling like 90% up here, because I'd already gone way past where I even wanted the stock to go. But then why we watch these intraday charts, and then you can swap between them if you want. It's all the same. I've just lost my day. There we go. So then obviously we got that pop. They then realized this isn't going anywhere. They probably saw the signals as well. So they started selling. Then we're just coming down, and I'll show you on the one because it's probably a bit more impressive. I can find the day. Why does it jump around? So then what was happening was we came down, we had a bear flag, and we broke down. Then we had a bear flag, and we broke down. We had a bear flag, and we broke down. We had a bear flag, and we broke down. And this is all inside the big bear flag that broke down. So you kind of have to wonder why anyone would still be holding. Even if you didn't sell up here and you didn't notice the divergence and you didn't notice the decrease in volume even on that pop, you still have to be aware of the next patterns that are happening. And this is why when the big days come and some volume and momentum comes into the swings we're doing, we have to kind of pay attention to them and almost treat them as a day trade. And if you're hitting your levels of where you had your price targets, there's no need to hold on to many shares and hope that it's going to keep going. Because if it does keep going, you've still got some, you've still got that buffer. But there'll be other plays that you could put your money in and make the same amount or higher probability. So if we're making this amount, we can sell. And then obviously it was just getting absolutely shit on the whole way down here. And I scaled back in down here because I like this candle and the volume. But then I just sold again when we broke the trend that we're in on this line. So we had a trend going on here. And when we broke out of that, I sold. I mean, I'd probably made like 3% or something on that. It wasn't anything kind of major. And then they actually just walked us down. There was like a 200k 200k ask up here, and they just walked it all the way down. They just kept walking it all the way down. And that's why we really need to just take our profits and watch these levels, because it's going to be really important for you day traders and for the swingers when we're kind of needing those targets to watch what's happening. Whether it's in between those lines, you might not need to pay attention, or maybe you could watch the hourly or something and you could just kind of see what's happening. But it's really important to have this, and it's really important also to have alerts, because that was the same thing with ISNS. I had alerts set in my chart, so I knew when we were coming up to this level here that I had to set an alert. So I had an alert set at like 8:50 odd, just on my phone to tell me to pay attention now. And I kind of want you guys to start doing this as well. When you've got your lines and you've got your trend lines, put an alert on the chart. I mean, you can do it in this, and I'm pretty sure you can do it in TLS as well. I think Gexter showed us before he does it. I might have dreamt that, but I'm sure they'll have that feature. Just set alerts at lines where you know it might get interesting, and just open up your phone, drop the timelines down, just see what's happening. Because it will just help you kind of lock in some of those gains. The other thing I've kind of been getting a lot of questions about is people are struggling to see what I'm seeing when I put up the watch lists and stuff. And I obviously try and write as much description as I can when I'm putting them up. But what I'm going to do is go through some of them and kind of show you what I was seeing and show you why I was selling, where I was selling, if I can find them. So we'll go through some of the ones that ran this week. So we had this one ran this week. And obviously there was probably a lot of plays in this before. I mean, you could have played like this play, or you could have played the full play all the way up, but we didn't have that in time. What we were watching was this up here. I'll delete some of these lines because they'll just confuse you. These are just my alert lines. what we were doing, we were watching this trend line, and we'd had this pop, and we were playing in here, and we had a triangle going on. So we'd called it out, or I'd called it out in here. And then obviously what you need to be looking for is your supports from your trend lines, where to buy, where to sell. And I'll put down these as much as I can, but every time you have a chart, you need to know where you want to buy and where you want to sell and where you should be selling, or at least scaling. Because I mean, this chart in the long term, yes, you might have a lot of room up to like 350 or 4. You could play it all the way up and you could think it's going all the way up there. But I mean, from even just my call out, we've made like 30%, and we played it all the way up here. We've got a 30% move in 2 days. So I'm out of this one. I'm out of this one like 90% already, because there's no need for me to hold and hope for glory up here. And now I've got funds that I can make other plays, but this was what I was watching. So obviously, I think the other question that Gup had for me was, when you have these plays, do you have one play in mind that you're going to play on it? And if that doesn't work out, is that it off and you delete the chart? And I think this is a good example of my answer being no. I'll always have at least 2 plays that I'll probably be looking for, because obviously what could have happened, and what I probably would have liked to have happened, was it to come back down and just start playing this channel, because you know we love these channels, and we could have just played this for a while until it decided to make its move. But obviously it's decided it doesn't want to do that, and it broke out. And it broke out because I think they had really good earnings, and then they had news this day. So they had the momentum from that news. And I mean, there was loads of options of what could have happened with this stock. Because we could have hit this and just dropped. We could have played up and played this channel and dropped. So in my head, I'm seeing what could happen. And whether that's from experience or just on the charts or looking at other charts and studying what's happened before, you need to know the options of plays so you're prepared for whatever happens in the play, and in the days and the weeks and the hours that we're looking at playing. Because if you're stuck with just one option in your mind, it could work out or it couldn't, or it might not work out. And if it doesn't work out, you're then just selling, and you're looking for another play when there might be other plays that are happening, and you might have removed it from your watch list or your charts, or you deleted it, and then it might come back to a place where you could make a decent amount of money and a decent amount of percentage gains. So I'll always have a couple of plays, and I'll also not delete the charts. I might remove them from certain lists. I mean, I've got 3 lists on this, and I've got like 40 lists on my Excel sheets, just of charts that might look interesting at some point. Like even with my channel list, I've got a lot of stocks in here, and there's probably only about 6 or 7 of them I'd play right now. But there's ones in this that could eventually have potential. And I mean, this was one I was looking at, waiting for it to form a channel or give me a bit more support in the channel, because it's just a new stock. I didn't know what it was going to do. And obviously this was kind of my ideal channel in here, after this dip. So we only had this first kind of real retest of the channel, so I wasn't really playing this move. And then obviously what they did was I think they must have done really well in their earnings, and they popped off the all-time high. But then that gave me the option of playing it that day, because I already had it charted out. So I played it in that day, and I made money off it that day. And that's why we always keep track of charts, even if we're not ready to play them yet, because other things could happen. And that's again why we always put alerts in, because I had an alert up here knowing if we got a breakout on this, log in at my chart and see what was happening. And we had a lot of volume on the breakout of this line, so I played it up and I sold it already. And I played it as almost like a day trade. And that's what I'll tend to do with these kind of breakout plays, is I'll play them as day trades, because I don't want to swing something where I don't know where its next level is, and where's my next level in this. You're looking at FINVIZ to find out. And you'd be just kind of hoping that it catches on and people keep buying it. But they could quite easily bring this down to try and get more shares of it, because it's just started, and it's at $16, $18. So how many shares are the toots going to have in this one? They're going to want to get some shares at some point, so they're not just going to let this run all the way up to like, I don't know, 50, 60, whatever the fib takes us. So that's what I'll do with the breakout plays. Which brings me on to the plays themselves. And I've deleted the chart I was going to show you. So I'll go through MAC, which I've played. And this is proof that it doesn't matter if the stock is 30 cents, 50 cents, or $15. You can still make the same percentages. It might just not look as cool, but I mean, that's like, actually, that's not where I bought it. Where I actually bought it. So that was almost 25%. And it's not 10 days, it was like a week. But this is a really good example of to look for on breakouts when there's not news. So this one broke out and it didn't have news, and there was a few things obviously going on. So we had an inverse head and shoulders going on, and we've got our kind of trend line. We're jumping up the side here as well that I was watching anyway. So we took off this trend line. We had the bull flag. We eventually broke out, and then we retested the trend line, and then we broke out the neckline of your inverse head and shoulders up here. I keep wiggling in my lines and I'll lose my actual precision, and that happens way too often in my charts. But then we got the kind of breakout of the neckline. So we got the breakout of the neckline here. And then I was starting to look, right, this could be interesting. So then what I did was I played this next day and I sold at this first level because I had this level marked from over here. So I played this, the first day breakout. I think I sold 80% or 85% up here. Let it drop. It retested perfectly, which tends to be what you'll see unless there's big news or big volume coming in. If it's just a natural stop movement breakout, it'll probably retest after breakout. So we scaled back in down here, and then what I was doing was just running it up to the next level. So I'd scale it every single level on the way up, and I'd just move my stop loss up behind it as we go. So this is kind of one of the ones we break out, and then once we start having a breakdown under that kind of big red day or the first red day, I'll be way down in percentage shares, or even zero. I'm actually at zero now on this one. I've cut this one. But then what we'll be waiting for is what happens next. It could make a flag and it could go back up and find another trend line to play off, and then we could buy back in and play again, or it could drop all the way back down and retest again. We don't know what's going to happen. So we can play the runs, but once you don't like how the run's going anymore, you can cut it. So that's kind of like playstyle 1 as a breakout play. And then obviously the other ones is playing the channels, and that's what I was looking for. And that stock that we were just looking at, I was hoping it would play this channel because they're the easiest ones to play. And Gixxer's probably better going through them than I am. But we can show them all the way the same way. So I'll use the same chart that he uses, and I'll remove some of the lines. But this is one obviously we were playing last week, and again, this is why we set alerts, because I know a lot of you guys take some of these swings, and you take them from my channel, and you take them from Mello's channel, and then you jump on the trading floor, and you'll just be so focused on the trades of the day and the big daily gainers and scalping, that you kind of forget to look at what your swing's doing. And obviously what we'd done is we'd bought in down here, or you might have bought in down here by the time I told you, and we played it up to what we already said was our resistance line at 350. And we smacked right on 350, and I put out a message again on the channel saying, really important guys, sell here, or at least scale out, depending on how big a position you've got. And I'm hoping people did sell or did lock in some gains, because chances are we could come back down. Whether we then go back up and retest, that's fine. I'll still have shares in this because I've scaled. But then what I'll be looking for is either it to do that breakout play that we just went through and give me a confirmation of a breakout and I can scale back in. Or what we'd want to do is it to come all the way back down and then we scale back in. You don't want to be trying to find like levels in here to buy on, because there might be levels and you might bounce off them. But in the grand scheme of things, you're buying in no man's land. Over the scale of the days and the weekly charts, you're buying in no man's land. So chances are you will kind of just fall all the way back down at some point. And that's why it's really important to have the alert set to know when to sell or scale out or watch your chart intraday and see what's happening. Because there would have been telltale signs on the intraday that this was coming back down. So you have to treat it like a day trade. Once you're getting to those levels, you have to watch the chart and look at the patterns intraday and look at the volume and look at the RSI and your indicators to see what's happening. And that's why it's always say the lessons I go through and the patterns I use and the education I kind of try and help you guys with is just as applicable to the day traders, because we end up being day traders when it comes to the points where we know we're going to have to sell or scale or watch it really closely and see where it's going next. Because we don't want to just be sitting looking at the daily chart when it's bouncing up here, going, oh yeah, we're going to go all the way up here and it's going to run this time. This is going to be the bounce. And I saw a lot of people on Twitter, and even what's that website with all the nonsense, Stock Twits or whatever it is. They're going, this is the bounce. This is the time we're going. And I'm like, okay, but why this time? I know this run that we had, or this run that we had, or this run that we had, or even the first run. Why is this one the one that we're going to go? And whether they've got an answer, and they might have an answer, and that's great. And most of them are saying because AHT is running. I'm like, yeah, well, AHT is running because it's getting pumped. And whether it just keeps running, that'd be great. And whether this one runs off it, that could be great as well. But how do we know this is going to be the one? And obviously there was a couple of indications that we're going to move, and I did say on this day as well to pay attention now, because someone came in with a 400k buy or something ridiculous, and we moved off on that one, but then we dojied, which is a pretty obvious sign of reversal. And if you were watching the daily chart only, probably your best bet of selling would have been right under that on the day that opened, and you would have lost 20 cents per share from not having an alert set and not paying attention during the day. As to what's happening on the smaller time frames as well as on your daily chart. So whether we set the play up on the week tend to start with, or on the daily, or you want to play it on the 4 hour. And I know Gup's now using every single time frame and writing a whole spreadsheet for all of them, which is great to see. But you need to be comfortable with dropping down your time frames and looking at what's happening, looking at the patterns within the patterns. Because even just on moves like this, where it just looks like a nice little trend up, if you drop down enough time frames, there'll be hundreds and hundreds and thousands of patterns going on, depending on what time frame you're looking at, just to see these movements that we're seeing really easily, just these bounces. I mean, there'll be everything going on. There'll be bull flags and bear flags and double bottoms and whatever you like. And you'll see them all in the little charts, but you need to know how much importance they have in the play you're wanting to play. So I won't be looking at intraday charts until we're hitting key levels. And obviously those key levels were kind of your midpoint break, which was in this area. So that midpoint break, I was watching the lower time frames. When I was bouncing and trying to snipe an entry, I was watching the lower time frames. And when we're coming up towards where our PTs are at, we're looking at the lower time frames to make sure that we know we're getting the most money we can. And we're locking in the profit that we've got. Because we don't want to just sit and be like one of those people on Stock Twits that are saying, oh yeah, it's going to the moon this time, this is the one. Because it could quite easily come back down here and retest. They could even bring it even further down if they really want to. We don't know what the game plan is. All we're doing is looking at the chart and we're playing off the chart. Quite bad at deleting lines. It's up my own chart. So those are really kind of important to look for. I've been blabbing for an hour now. Unless what I'll do now is just let you guys ask some questions if you want, and then I can stay on for a while and chart some charts with anyone who's got some charts that they want kind of looked at, or plays they want looked at, or even if you had some issues this week with some of them, and we can go through them as well. But just so I'm not holding everyone up for the next however long it takes to go through all the charts I've got in my list to draw for you. If you've got any questions just now, you can punt them in. Or I suppose everyone can stay for all the charts if they really want. I wouldn't have thought all 50 of you or whoever's here want to let me draw pretty lines for the next couple of hours.
Awesome. So everyone just show some MTA love to Broda in the chat. Thanks again, Broda, for all your time on Sunday.
No worries, man.